This meeting is being recorded.
Namaste. In this video, let us try to make an attempt to identify reversal bars which will help us to identify potential trend reversal areas without the help of any particular indicators. And I request you to kindly note that it is only an attempt. And this may, with the sole aim, it is made to provoke some inspiration in you, so as to take this study further. Here I will start with this bar from here. As you can see here, till this area the price has come down, and here we have a gap here, and after that the price went up to this here, and this bar I request you to note this bar very clearly, and I examine this bar very clearly. Here the weapon itself is high, and there is no almost weapon is high, there is not much gap between the weapon and high here, and there is no fresh low made here, but the close is very much near to the low, and the gap between the low and close is also near, and the range of the bar is also very, lesser than previous bars, which indicates a potential trend reversal here. And on this at the close of this day, one becomes suspicious about the next day. Next day morning, what happened was, this opening was almost at the close of the previous day or previous day low. As you can see here, the opening is here, and the high made during the day is very close to this open. There is not much distance between the open and high, and there is very much good distance between the high and the low of the day, and the close is very much near to the low of the day. It confirmed the downtrend. On the next day, there was the opening was almost at the center point of the previous day bar, but the bar did not make a new high or new low. The pertinent point here is the bar did not make a higher high, and the close is almost above the open but not far away from the open, and the distance between open and high is somewhat little. So this bar is suspicious. This is what is called as inside bar technically, which indicates trend reversal at some times, but here the trend continued. It is called as inside bar. On the very next day, if you can see that the opening was very much near to the low of the previous day, and it came down, and the close is near the low of the day, so the trend continued. So the first bar which indicated potential reversal of the trend is here, where after a good run, say for 3, 6, 9 days, this bar appeared at a shorter length, where the open itself is high, and closes near the low, which indicated potential trend reversals. And after that, how many days it went down? 2, 4, 5 days. After 5 days, on the sixth day, if we see the bar opened at the close of the previous day, and itself is the low, and it went up smartly and surpassed the previous high, previous day high, and the close was near high of the day, which indicated another potential trend reversal for a short term here itself. And later, this price went up, and the noticeable point here is every day it made a low, but the low is not potentially low below the low made by this reversal bar. This is a key bar. This bar low was not breached here, though this bar is made a low compared to this bar's low, almost at the same level or somewhat low. But here the close is very much near to the high. That is the good point. And here also there is the possibility of the bar made a high, but the opening itself is high. When the opening itself is high, and the bar failed to make a close over and above the previous day close, it is the one of the potential turning points, at least for a shorter term. Here the close is, let me check whether it is over and above or below. Here the close is, here the close is 24,734.3, and here the close is 24,715. So there is no close is not below the previous day close, hence it cannot be said to be a reversal bar. And the low is also above, and this low is also above this bar, but somewhat below this bar. The weakness itself is indicated here. The next day weakness here is indicated here. When open itself is high, we can be suspicious that next day might not be a strong day, and at the same time we cannot say that it will be a very bearish day. But potential bearishness will be there, but at least what we can say is the previous day's bullishness may not prevail, and the most in all probability, when this pattern appears, the next day could always be a weekday, and hence, and that weakness has been proved when this day opened, and open itself remained high. This weakness prevailed, and on the next day itself also we can see that the opening is almost just above the previous day close, and the close is very much near to the open of the day. But the noticeable point here is the low made during the day is not below this day. So we can say that the primary trend established by this key reversal bar is not breached, and it can be further extended. And this way, though the range is shrinking or becoming less and less, this bar is still going up since there are no fresh lows made. And when it came here, you can see that the open itself is low and the range is more, and a high day closes near the high. And this took place after the run of, say, how many days? Let us see, 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11. This is the 12th day. So after a good run of 10, 11 days, this bar took place, which is a point of suspicion. And on the next day, you can see that a small bar appeared. Here the open itself is low, and high and close are very near to this, to each one another, but still the range is not that good. That is first point of suspicion. And on the very next day, if you see that open itself is high, when open itself is high and the range is more, and though a new low is not made, the open itself is high and the close is near high, very much near to the open. This bar closed below the open after a good run of 10 12 days, which is a point of suspicion. And this downtrend is confirmed on the next day when this open is the high itself and it made a low compared to previous day low. So this bar is a reversal bar. Like this, you can see here the same pattern appeared, and here the same pattern appeared. They are almost same. Here one of the only difference is the distance between open and close is more, the distance between open and close is less compared to this. But at the same time, you can see how the pattern appeared. The same pattern here appeared and the same pattern here appeared. So the appearance of the pattern must be after a good length or good run of the trend of the primary trend. Here it is upside, so it appeared after 12 days. Here also it is upside, it appeared after 9 10 days. Like that, it is also downside, it appeared after 7 days. So then this bar becomes more valid. Though the bar appeared here, but it was a very short duration. You can see only after 3 days. So instead of taking it for after 2 3 days, if it takes place after 9 days or 10 days, it is more valid. Like that, you can see fresh lows appeared here till this bar. After 6 9 days, another new bar appeared here where it engulfed the previous bar, which is called as outside bar, and the range is more, so this become a key reversal bar. Reversal bar. It clearly indicated two features here. One, it made a higher low compared to this low, and it made a higher high than two previous sessions. You can see it is higher than previous 2 days back high. It is higher than previous day high. So it made a high over and above two previous days highs, and the low is above the previous day low, and the open is near the low, and close is near high. It took place after 9-10 days and becomes very good reversal bar, indicator of reversal bar. And the next day when the market opened, it made a new high and the close is near the high. So it confirmed the at least some short duration uptrend. And in the same way, if we can see that this new trend continued up to this point, and after some 8-9 bars, this bar appeared. This bar, first bar appeared where it is shorter in length, and the open is above close, and range is somewhat lesser. And before that, here, if you carefully see, the open and close, though a bit more, close is just above the open, the range of the bar is shorter. The next day, the range of the bar is much shorter, and the bar closed below the open. So it is first indication. On the very next day, what happened? The range is more, and the open is very much near to the high of the day, and the price was hammered down, and this close is near to the low of the day. It means the traders hammered down the price, and the price seems to be unreasonable. So it took place also after 6, 8, 10, 12, 13, 14 days. So after a good run of 12, 14 days, this took place, and this is the first area of caution. On the very next day, what happened? The price opened somewhere near the previous day close, but it made a new low, and after that the bar did not sustain. The next day it went up, the now further low formed, but once this bar appeared here, as I told you, this bar also appeared here. We have to keep in mind the lows made by this bar and this bar, and wait for that to be breached. If we keep a line here, the low will be here. Here it was breached, and this line, the low is breached here. Once these two lows are breached, you can assume that at least for a shorter duration, the market turned bearish, and this bar acted as a reversal bar. And here also you can see that after some 1, 2, 3, 4 days run only, this bar appeared, but we cannot take it for granted that this is an indication of reversals. Generally, we should take this into a bullish reversal bar, but that reversal did not take place. For this reason, it took place only after 4 days. So, whenever a bar like this appears and a bar follows this, it would be pertinent to note down the levels made by high and low of these bars, and to wait for the price to breach those levels. Then it will be confirming the trend reversal, and these bars act as potential reversal bars which use as an indication without the help of any other indicators. And you can see that here this bar when opened actually low, somewhat lower, at the almost at the same place of the previous close. It made a fresh low, but the bar recovered very smartly. I mean, sorry, this opened low below the previous day low and went further down, and the price of the stock has been pushed up by the traders, and it smartly went up and closed almost near the previous day close, and the range is almost I mean somewhat higher than the previous day bar, which is a reversal bar, and the level must be noted down here. And here you can see that next day there is no fresh low made, and on the next day though a fresh low is made, a higher high is made. So the cases where their lower low is made but a higher high is made confirms the uptrend. On the same way, the stock went up smartly, and for some days, how many days? 3, 6, 9, 10 days. After the 10th day, a red bar appeared, and this level, the bar did not breach the previous day low. So when this previous day low is either breached or the previous day high was also not breached, it becomes an inside bar, and these levels must be noted. And for further confirmation, it would be pertinent to wait for the price to come down, especially in case of day traders. And this level must be noted. Here you see on the third day of trading, once the price has come down below this level, and this open is near the high of the day, and it can be safely assumed that during the day is most likely to be bearish and go down, and day traders can take positions for put side or to remain bearish and to remain on short side. And also on the next day also it went down. West on the left on the next day the bar almost opened below the open, and once this high is surpassed, as you can see, it acted as a good reversal bar. But the thing is, next day the levels are not maintained. So once this bar, you see here, this reversal bar is here, and this bar engulfed almost all the bars. Still, when we make note of the high and low made by this bar, you can see that those levels have not been surpassed. I will place one horizontal line to make my point clear. Now, this is a good bar, but you see that this high is not breached here by this bar. So we cannot take it for granted that this is a reversal bar. Next day, what happened? The bar, the high was made over and above this high. This high passed this high. There is a low. This low is also above this low. But the thing is, the opening is the closing is below the open, and the bar is a red bar, which is a suspicious one. So we need to wait for at least 2 more days for additional confirmation. And on the next day, the bar is an inside bar, and the previous day high has not been surpassed. So there are no consecutive higher highs for 2 days, and though this large bar is there, the pivot bar or the reversal bar high is not surpassed by this bar. Technically speaking, not above making a new high, but it is below the previous day high. So this price action is somewhat suspicious. And on the next day also, you can see that the bar opened very much higher, and the open is very close to the high, and the price has been hammered down. So it means here, if you we can carefully observe these three bars, the traders are in favor of hammering down the price and of the opinion that the values are overvalued, and there is no sustenance of the bullish trend. And when this has come down, you can see that here also, even though there is some upside potentiality or movement, still the bars did not show any characteristic or the confirmed uptrend up move, where the potential up move is probable, with the thinking of the traders that the prices are undervalued, and still the levels mentioned here are not surpassed by the price action, and still the price is hovering around these very much levels. So Ultimately, after 2 days, it came down, and this bar acted as a potential reversal bar here. So the point here is, when a bar is appearing, we have to compare how the open is, where the open is in comparison with yesterday, last two trading days open, last two trading days high, last two trading days close, last two trading days low, and present day open, high, low, close. And when we compare where the high of the day is to close, where the high of the day is to open, where the low of the day is to close, where the low of the day is to the open, they give so many clues as to the thinking of the traders. And keeping that in view, the levels made by those bars, if we make a note of the uh, point, I mean, what we call as values, then that can be of a very good help for us to take steps. Next here, when we see this, we have seen that this it acted as a reversal bar, because the low is new low, but from the lows market recovered and went up. So next we take out these levels and place new levels. Here I will place new levels. Here you can see next day it went up, it opened up above this level, and it sustained, but on the next day it made a new low. So when it comes to the third day for the day trading, you can see that the open itself is high, almost high, very near to the high, and the open is near previous day open but not near previous day close. And ultimately this day low was breached, and this level I have placed here has been breached by the bar, and the close is near the day low. This is first point of weakness. And on the next day we can assume that for this day the market is most likely to be weak, and when the market opened it was a near day high, and the market after opening did not move very much up and came down. And at the same time, this level made by and marked by us was not breached during the day, but still this weakness continued for the day. On the next day, as you can see, the bar has opened near the low, but did not go beyond this level, and it recovered smartly, and the price closed very much near to the previous day close over the above open, which indicated some bullishness. And on the next day, after this level has been passed by this passed by the bar, when market opened near the low, and this level is passed on and crossed by the price, this price for the day remained bullish. So potentially this bar acted as a reversal bar. The levels made by this bar are clear cut indications of support and resistance, and once this level crossed, again the market went up, and we got the next level here, where this bar close and high are equal, but on the next day market opened up. After that it went to the small higher side to on a small note. There is not very good gap between the open and high, and still there is no new low made. So yeah, as far as this bar is concerned, we are not sure whether there is a change in the trend or not. In that case, what I do is I make a note of the loss made here. Here the loss made. So till these lows are made or highs are crossed, I am not sure. As I told you, 2 day high, 2 day low is very important. So I wait for the third day. On the third day, what happened? On this day, I simply sit aside in the side screen without doing anything, and I want to wait. And on the third day, what happened? The market opened almost near the low. This is first indication of the weakness for the day. This opening was at the low or near to the low of the previous day, and previous day close is near to the previous day low. That is the first weakness. And it came down, and it never went up. It never crossed its high made during the day. So I remain bearish for the whole day. And on the next day also, the market behaved like this, same way, same pattern repeated. So for this day, I remain bearish. And on the next day, you can see almost the same thing. Here, the notable point is the open and high are almost at the same level, but on the next day, the important level we marked has been crossed by the opening itself, which indicated some bullishness by the price action in the market. So, on this particular day, when this market opened higher than previous day high and it never came down the low made by the opening after opening made by the price after opening. I wait till the market goes above the open and starts going up and the previous day high is crossed. And once the previous 2 days high is crossed, in this area, the market is bullish. But once we cross this, that will be definitely a good sign for the market for the day to remain bullish or bearish. And here also you can see for yourself that after opening market crossed the high of for the 2 days. This day and this day, the high has been crossed. So the probability of a market going intraday down is very, very less. This way, we can identify potential reversal bars like this, and whenever you feel that a bar is indicating some reversal price action, I request you to kindly make note of the high and low made by the bar and to keep it there at least for the next 5 to 10 days and observe how the bar, how the levels made by this bar are being affected by the price action of the current day bar. That gives so many insights into the price action for the near term, for the near short term, say 10 to 12 days, and also intraday. For intraday, it is always advisable, in my practical opinion and personal opinion, to take into consideration with the last 2 days high made and the last 2 days low made by the price, and whether the current day high or low has come over and above that level or below that level. So, in comparison with those things, we can make an assumption as to the price action for the intraday. That is my opinion. And I hope that this video will give, will be of some help to you in making a trading decision. Thank you. Thanks for watching the video.